So the first thing I like to do before I dig into a 10Q is I like to look at a company's cash flow. Let's see here. Let me just refresh this page. All right, there we go. So I like to look for certain things that pique my eye. So I'm looking at operating cash flow right now. Things look pretty normal. I mean, it's a little bit of seasonal fluctuation, so I'm not too worried about that. Now, when I look here, I see all this investing cash flow, this outflow of cash right here. So when I take a closer look at that, I see that they actually made an acquisition. So you can see that they spent that much money. This is in thousands, by the way. So they spent about 1.7 billion here on acquiring a business. So when I look into the 10Q, I want to know what exactly did they purchase. And then I'll take a look at some other line items here. Now I'll notice that they issued a lot of debt here. So I want to look into what this actual debt is. So we'll found out more about that in the 10Q. And just looking at the repurchase of capital stock, you can see that over the last few years, they've actually been spending a fair amount of money repurchasing stock. So the question that comes into mind for me is how much are they repurchasing and what is that repurchasing time frame? Now, one other thing I like to look at, I like to look at the balance sheet. Let me just get Yahoo to load. Technical difficulties. Come on. All right, there we go. Now you can see that the ordinary share number or the shares issued is actually increasing from 2019 to 2020. But at the same time, they're doing a repurchase program. So I want to look more into this as well. So now we're going to dive into the 10Q. And just to be clear, I'm not going to talk too much about Etsy as a company. I actually don't know too much about Etsy, but my main purpose here is to talk more about the different items that we're going to read about in the 10Q. So just starting here, I'm going to scroll down a little bit. Got a nice little table of contents. And what I like about Etsy's 10Q is that, they got the orange going on here. Let's scroll down here. They got summary of risks. So this is just everything that could possibly go wrong with the business. So if we actually look at this, we'll kind of look at some of the line items. Some of them are pretty obvious, but some of them are actually more important that we want to pay attention to. So let's see. I mean, that's obvious. COVID-19, obvious. Fluctuations in quarter, that's also obvious. That's pretty obvious as well. Business could be affected by economic downturns, that's obvious. Yeah, this is all pretty obvious stuff, so not too important. So right here they talk about a recent acquisition. So that's that $1.7 billion that we are talking about. So our recent acquisition of Depop Limited and Elo7 may create strains on our management, technology, and operational resources, and may prove to be costlier and take longer to integrate than we anticipate. Well, that's not too good, but that is an important thing that we need to keep an eye on. And this is also another one. We have a significant amount of convertible debt that may be settled in cash and may incur additional debt in the future. So what they mean by convertible debt is that, say you gave me a loan for $500 million and I own a company. Now you have the option to actually take that in the form of equity. So instead of getting that $500 million of cash back from me, I could give you stock instead, or a combination of it. So it depends on the person, whoever is whoever is taking that, whoever is providing the loan. Then we'll go down a little bit more. And then right here, other risks. So future sales and issuance of our common stock, our rights to purchase common stock, and conversion of convertible notes, which I was just talking about. And that's going to add dilution to stockholders, could cause the price of common stock to decline. So now we go into the financials. And let's just go through some of the line items, see if there's anything noticeable here. So this is as of September 2021, as of December 31st, 2020. So we're looking year over year. So we can see that our cash position actually declined quite a bit. And then we see this item, goodwill. So goodwill is actually the premium that we're paying for an acquisition. So say I purchase a company and that company's book value is worth 500 million again. But instead, I paid, let's say about 1.8 billion or so. Then what I paid in premium is this amount, which is recorded as goodwill. And this is an asset to the company. So you'll actually see this on the balance sheet, which we're on right here. All right, and then we'll scroll down a little bit further. We'll see the statement of operations. And then now they break it down into 3 months and 9 months. So now we can kind of see, is revenue growing? Is it slowing down? In this case, if we're looking at 9 months, revenue is growing, margins are growing, and obviously our expenses are growing as well because our revenue is growing. So what we can do is we can kind of do like a percentage. We can get our gross margins and we could divide it by sales to figure out what our margins are and see if that's actually growing. So we could always do that kind of analysis. Now right down here, they show us net income per share, and then they show it in basic and diluted. So what diluted is diluted is basically looking at the net income minus preferred dividends, and that's divided by outstanding shares plus anything that could be converted. So the convertible bonds that we talked about, or the convertible notes. So this
Okay.
is something, I would say diluted is more important than basic, because this is considering dilution. And then here you could see the weighted average common shares outstanding to basic. And if we're to convert a lot of those notes, then that amount is what we'll be looking at. And then this is just some other stuff. We'll skip through that. Okay, so this is the good part right here. This is what I like to look at. So stockholders' equity. So now we can see the amount of common shares that we had. So this amount right here. And now we're talking about vested options. So vested basically means the time period of stock-based compensation. So if you're working for a company, you're not going to get that stock right away. You have to work for it. So you actually have to earn it. So after a certain amount of time, you will be able to exercise those options. So this is saying that basically this amount of shares was exercised. And vesting restriction stock units, basically called RSU, is the amount that could be exercised in the future. And then right here we see stock repurchase. So that is how much they actually repurchased throughout this period right here. And then we also see a 9-month snapshot of this. So this is the interesting thing to note. So when we're looking at this in a 9-month period, we started with this much, and we actually ended with more. So we actually gained the amount of common shares. So when we look at the math, we had exercise options. We actually had convertible senior notes. So they decided to take equity instead of cash. And then we see that the RSUs are added here as well. And then stock repurchase. So this is something that we really want to pay attention to. Even though a company might say that they're repurchasing their stock, they might actually be increasing the amount of common shares because of these convertible senior notes and these vested options. So very important. And yeah, this is basically just same deal. And this is the cash flow. So this is just a more detailed of what we saw on Yahoo Finance. All right, so here you can see during the third quarter of 2020, the company issued approximately 7.3 million shares of common stock with the repurchase of convertible senior notes due 2023. So what this is actually talking about is that 7.3, this amount right here, as you can see. So it's not exactly 7.3, but they just kind of estimated or rounded, I guess. So yeah, that's that note right there. And now they actually talk about Etsy and they describe the business and stock-based compensation here. All right, so let's see. Recently issued accounting pronouncement. So this is more accounting stuff. We'll skip over it. And then here they actually break down the revenue. So they make marketplace revenue and service revenue. So what we want to see as investors is that this is a growth stock. So we want to see that this is actually increasing. So if we're looking at this 9-month period, revenue from this sector is increasing. Revenue from this sector is increasing. Income tax, we'll skip this part. Net income per share. So this is a little interesting because here they talk about if converted. So these are all the notes. And like I mentioned, they have the option of taking cash or they have the option of taking equity. You'll kind of note that they say if converted because they don't know that. They don't know yet. So now they make these estimates on EPS based on dilution and basic. All right, so right here, note 5, business combinations, they talk about the acquisitions. So here we can actually see what the company paid for these acquisitions. So we can see that cash of 1.48 billion was paid. And then we could actually see how they valued this acquisition. So here you can see the current assets, property and equipment, development and technology, trademark, customer relationship, goodwill. This is the premium that they paid. Current liabilities, all of that, and that sums up to that 1.492 billion. So this is always good to look at, just how they valued this. And then this actually shows this acquisition as well. So same deal, talks about what they paid in cash and then how they valued that. So this is pretty important too, revenue and earnings. So it says revenue and net loss were 7.4 million and 26.8 million. Notice that they said net loss. So these two acquisitions that they made have actually been losing them money. And then right here, they talk about pro forma information. So pro forma is kind of just like a what if scenario. So what they do is that they actually start adjusting a lot of different things. So let's see right here. So the costs directly associated with the acquisition, such as legal, professional service fees, and all of that, they're basically adding it back in. And then they're saying, well, these acquisitions are actually giving us maybe this much revenue. And then that's basically what we're earning. And then here you can see goodwill and all of that. And fair value measurements. This is more like an accounting thing, so we're going to kind of skip over that. So now they talk about all the different notes. And you can kind of see the carrying value, fair value of these notes. And then convertible debt. So now we see that 1 billion that we saw on the cash flow statement, if you guys remember. So in June 2021, they issued $1 billion of the 2021 notes. So now let's kind of look at the details of this. So you can see that the conversion rate is 4.05 shares of a company's common stock per 1,000 principal, which basically turns out to be 246.80 per share. And then now they're basically stating out the terms. So let's see. Based on the terms of the 2021 notes, when a conversion notice is received, the company has the option to pay or deliver cash shares of the company's common stock or a combination thereof. Accordingly, the company cannot be required to settle the 2021 notes in cash, and therefore the 2021 notes are classified as long-term debt. So basically, they can convert this anytime after September 31st, 2021, and the notes actually mature on June 15th, 2028. So that's about 7 years. So basically, between September 30th, 2021 to June 15th, 2028, they could convert this for equity instead. And then there's more notes if you want to read through it, but that's basically the gist of it. And then now they actually talk about all of their different convertible debt. So this you could read more into, but I just covered that one in particular, the 1 billion that we saw on the cash flow statement earlier. And then here we could see the interest expense. It's just like any other note, you're paying interest on it, and then eventually when the note matures, they have to pay the full amount. So when we look at the total here, they are paying this amount for all of these notes. And then you can also see that on the income statement as well. And then talks about credit agreements. They entered into a $200 million senior secured revolving credit facility. And now they talk about legal proceedings. And then they talk about stockholders' equity again. So now they're just breaking things down a little bit further. Stock-based compensation. So we already talked a lot about stock-based compensation and the vested, so we'll kind of skip this part. All right, and then now they're talking about the overview of the business. We'll kind of skip through all of this. They talk about the quarter financial highlights. So here they're going to talk about how much they made and all of that good stuff. They talk about the acquisitions, ELO 7, the pop, the dates, and the actual cost. So they're really just going over what we actually just already went over. So this is kind of like the dumbed down version if you don't want to read the actual statements. And here they talk about convertible debt again. So as you can see, the 10Q is actually really repetitive. It's just repeating the same things over and over again in different formats to make sure that investors understand what they're actually looking at. So now this is something I like to look at also, key operating and financial metrics. So this is what the company deems as important. So right here, GMS, we don't really know what GMS is, but they define it right here. Gross merchandise sales is the dollar value of items sold in the marketplace with the applicable period. Blah 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 blah. So basically, this metric increased. And then when we look at the revenue, it also increased. And we could look at the 9 months too. So we see increases here, increase there. Service revenue is increasing, gross profit is increasing, operating expenses are increasing. That's because revenue is increasing. And then here's another metric. So these are non-dollar metrics. So it talks about active sellers, active buyers. And then as we can see, the amount of active sellers are increasing. The amount of active buyers are increasing. So that's what we want to see. We want to see user growth. And then now they actually define an active seller is a seller who has had a charge or sale in the last 12 months. So now they're defining their terms. And an active buyer is a buyer who has made at least one purchase in the last 12 months. Now we could see breakdown of the revenue again, gross profit. So it's just repeating itself here. And then cost of revenue. Cost of revenue increased, primarily driven by increased costs related to overall volume increases on Etsy Marketplace. The increase was also due to cost of revenue associated with the Depop and Elo7 acquisitions, including employee compensation-related expenses and amortization of developing technology, and to a lesser extent, an increase in outsourced customer support expenses. So here they're outlining why their cost of revenue is going up. So we can see that it's related to that acquisition and employee compensation, as well as amortization. So these are all non-cash expenses. So that's a key thing to note here. And now they talk about operating expenses. Now they're saying we expect an increase in employee compensation related expenses, including stock-based compensation, in the fourth quarter of 2021 and future periods driven by headcount growth and all of that from the acquisitions. So we're probably going to see more shares flood the market in the future. I know how I read that. And now they explain their marketing expense. Let's see. Increase was primarily a result from the acquisitions. Yeah, a lot of the same stuff. So as you can see that basically that acquisition is creating higher costs in all these different sectors. You can see that stock-based compensation is going to be in general and administrative. They also talk about it in marketing. So it's kind of distributed throughout all these different line items. So it's not in just one line item, it's distributed throughout all of them. And other interest expense, pretty small amount, so not very important. Now they talk about the 9-month period. Let's see. Basically the exact same thing that they said about the 3-month period. Sources of liquidity, let's look into this. So as of September 30th, 2021, we have 4 outstanding series of convertible senior notes. And we saw that earlier when we were talking about the senior notes and just all the different interests that we need to pay. So this confirms that. So based on the term of the notes, we have the option to pay or deliver cash, shares of our common stock, or a combination thereof. So here it says during the 9-month period ended September 30th, 2021, we paid 43.9 million in cash and issued approximately 1 million shares of Etsy common stock to settle conversion notices of 43.8 million aggregate principal amounts of the outstanding 2018 notes. So you can see that they paid both cash and equity. Now they break down their different cash flow. You talk about the from operating cash flow from operating activities, from investing activities, and financing activities. So this you could kind of read on your own time. but this will give us more detail about what we actually read in the cash statement on the Yahoo Finance. Control procedures, it's more of an accounting thing. And then risk factors. Here they just list an absurd amount of risk factors, and this goes on for many, many pages. So that's basically the 10Q in a nutshell. Do you have any questions? Okay, that's good. Then, Callie, do you have any questions? He might not be there. Well, I guess that concludes everything. Hope you guys learned something. Gotcha. All right. That concludes that.